Hello, everyone. Welcome to a Friday Live. I missed last week. I'm sorry. I should have posted in the community tab, but it was Valentine's Day, and I figured that people had some other things to do, maybe. I don't know. So I'm back. We'll be back every Friday at 3 o'clock. I'm excited for this one. We're going to talk about insurance. It's everyone's favorite topic, I know, but I have a super fun guest that we're going to have today. I'll bring him up now. His name is Jeremy Mueller. Hello, Jeremy.
Hello, thank you for having me.
Of course. So Jeremy is in the insurance space and he is with State Farm. So tell us a little bit about you and how long you've been doing insurance.
Yeah, so it's kind of a funny story. I'm a third generation State Farm agent. So my grandfather started he was the first State Farm agent in Scottsdale in this, 50s, 60s. So, but I'm third generation. We've kind of located in the Scottsdale area. We've got 3 locations in Scottsdale and Carefree. And I've been doing it since 1999. I started when I was in college at ASU. So opened my doors in 01 and just had tremendous growth and have more fun now than I have when I started out, that's for sure. So
That's
we
good.
get to meet people like you, Sean.
Yeah, I know. That's good that you're having fun. So I failed to say, if for those people that are watching, let us know where you're watching from. And then as we're kind of talking, I would love to hear about anybody's experience with insurance because it seems to be kind of a hot topic right now with everything that's going on in the world. So I would love to hear other people's experience and what they're seeing with their insurance as we go. Jeremy, before I jump into this article, are there any big things that you're seeing right now in your world with insurance and policies and writing policies and things that people should know or be aware of?
Yeah, so in my 25 years of business, there's been more activity in the last 18, 24 months with insurance, home and car, than we ever have. I mean, we're in the media constantly because there's so much going on and there's so many rapid changes happening. So I'll keep this Arizona specific, but basically we are dealing with carriers concerned about wildfire. That is happening. So the underwriting guidelines are tighter than they ever have been. Stuff we haven't necessarily had to do with dead grass being around, or you're cleaning trees leaning against a house. Like we may ask someone to clean that up prior when it goes through underwriting. Just stuff that in Arizona you don't think of wildfire, but it is something that carriers are, it is happening. And so they are very, very concerned with it.
Yeah, it's interesting. I just recently changed insurance companies because of costs, right? And it was the first time that I had somebody have to come out to my house and do an inspection.
Yeah, like stuff like that, especially on a relatively newer house, meaning 30 years or newer. Like we never saw that type of activity before, or in some of the older areas of town, asking someone to redo their roof. A lot of times in some of our, more affordable areas, the game was wait till a hailstorm comes and then we're going to get a new roof. Well,
Right.
that game's over. Like that,
Yeah.
you're going to have a hard time finding coverage at that point.
Yeah. Here, Derek Hudson, it says, we live in the Midwest. Our homeowners insurance went up over $1,000 from last year. And last year it went up over 20% from the year before. And that's with 0 claims. I'm with you, Derek. I mean, we don't have any claims on ours either. And ours was going to go up. And so that's why we changed companies. The people that we're with, they shopped it for us. And we switched companies just because it's crazy. It's crazy. Jared, before I jump into this again, are you seeing, or did you get hammered with questions about State Farm and California?
Oh yeah. Yeah, absolutely. Yeah.
I
I
mean,
mean, it's a big topic. I mean, we're California licensed, so we do have some exposure over there. But luckily my office in particular, we're not dealing with any total losses. I know some other agents that are over there, and it's a tough situation. A lot of it is the rebuilding that's going to take place is going to take the infrastructure is just destroyed in some of these areas. And so what a one-off house build that could take 18 months to 24 months is going to take 4 to 5 years over there. And it's a horrible situation. It is State Farm's largest claim. And most of the industry. So there's quite a bit of risk level that all the carriers have over there. Not going to get into the politics of California, but there's a lot of stuff behind the scenes that are going on that you can read about over there. But overall, the response State Farm has had, at least what we see, has been very, very good. I mean, they have centers set up for everyone to help people, but we do get quite a bit of questions on it.
Yeah, I mean, and I was just talking to somebody earlier. They said that they heard the dollar amount number is like in the billions.
Oh yeah, it's in the billions.
That's
it surpassed Katrina. Katrina used to be our
wow.
biggest one, so it did surpass that.
Wow. I don't think I knew that. That's crazy. All right, so let's get into this, because one of the things that insurance affects is homeownership and what that looks like, because there's a cost with insurance. So there's an article recently with the Fed chair that warns that high-risk states could become more mortgage deserts in as little as 10 years, making homeownership impossible. So the Federal Reserve Chairman Jerome Powell has warned that mortgages will be difficult, if not impossible, to secure in some high-risk areas in the future, as storms and wildfires pummel certain areas of the county, causing insurance rates to skyrocket, particularly in Florida and California. The chairman foresees a day when many areas will have turned into mortgage deserts. Both banks and insurance companies are pulling out of coastal areas or areas where there are a lot of fires, he said at Tuesday morning's congressional hearing. What's going on? What that is going to mean is that if you fast forward 10 to 15 years, there are going to be regions of the country where you can't get a mortgage. He told the banking committee. Now, I'm just going to stop for a second, because what do you think about that, Jeremy? Do you feel like...
Yeah, I think there's some truth there. I mean, because now a lot of these coastal areas that are, and I'm talking on the coast, meaning you have ocean views and stuff. I mean, they're probably not in the mortgage market to begin with. But what we're concerned with is the inland areas, that normal $500,000 house where, like take California, you've got property taxes that are very, very high. And now you throw in this insurance rate that is going to be dramatically high. And we don't know what that's going to look like yet after the dust settles. One thing to keep in mind is insurance is a laggard when it comes to what's going on in the real economy. So because you file a rate, it has to be approved, and it takes maybe a renewal cycle to hit you. So, that's why, like right now, what we're seeing on high costs are kind of indicative of what happened in 21 and 22. It just takes a while to hit you. So we don't know what this is going to look like, and I think there is some truth to that. I would hope there's a private option on there, and as long as you can charge an adequate rate, or you may have some exclusions. That's what we're seeing in Arizona right now, and some of our places up north. Is there's some carriers that are excluding wildfire.
Yeah, and I feel like I talked to enough insurance companies that they're telling me you go back to the roof issue that you were talking about earlier, that if the roof is old, then what they're doing is they're depreciating that roof. And so if something came and catastrophically hit your roof, you wouldn't be getting a brand new roof from the insurance company. They would depreciate that. And if it wasn't new, they'd only be giving you a portion of what your roof would cost.
Yeah, so it depends on what carrier you're with, but you're absolutely correct. Let's just use a 30-year-old. They put those roofs usually on a 30-year depreciation cycle, and so like there's some carriers, if the roof's in poor condition, they won't insure it, or if the roof is super old, they won't insure it.
Mhm.
But where there's some that'll do it, and they will either exclude the roof, or they'll say, okay, the roof has a 30-year lifespan. The roof's now 25 years old. You get, maybe 10 cents on the dollar on what that true claim cost is.
Yeah. So Derek came back, and the big thing now for insurance companies to do is to make the deductible for wind and hail damage, i.e. your roof, 2% of the assessed value of your home. We might as we might as well pay out of our own pockets. That's part of the thing that I noticed too when I just changed my insurance company, is that they actually wanted me to increase the deductible on my car. And I asked why. And they said, with all the new safety features on new cars, they said it's not impossible, but it's a lot harder to get in an accident. And they said, if you got in a small little accident, it's probably going to be more beneficial for you to just pay out of pocket and cover that, rather than run it through your insurance and have them jack up your insurance costs.
Okay, so I think the first part was a sales pitch to get you to take a higher deductible. The second part, there's some truth to. You don't want to put through a small claim. On Derek's question, though, luckily where we're at in Arizona, we're not seeing those super high homeowners deductibles that 2% range. Some areas of the Midwest on the coastal, absolutely, that's kind of becoming the norm. Insurance is becoming, in particular home insurance, a privilege and not a right. Meaning, there's people out there that will not qualify for a homeowner's policy. And it's a different mind shift change. So you want to self-protect yourself. Sometimes those high deductibles, even though they seem bad, it does force you to maybe have make sure you have adequate savings account to cover the little stuff, and know if there's a total loss, your home's going to be replaced if there's a very, very bad claim. But for those, I don't know where you live, Derek, but say those smaller, and I say this in quotes, but those $15,000 to $30,000 claims, you may be paying cash for, which sounds ridiculous. Like 5 years ago, I would never have said that.
Mm-hmm. I know, it's crazy. And he's in the Midwest, so a little different, but yeah, it's just crazy. All right, let's read on. Okay, so in the question and answer portion of the hearing, Smith and her constituents are struggling with the 40% increase in insurance rates in the past 7 years, which she attributes to climate change and extreme weather events. According to climate risk analysis firm First Street, between now and 2055, insurance premiums are projected to skyrocket in many areas, including Miami, jumping 322% from current levels, followed by Jacksonville, Florida by 226%, Tampa, Florida by 213%, New Orleans by 196%, and Sacramento by 137%. I don't know anyone who doesn't see this crisis of rising insurance as not being caused by extreme weather events, she said, noting extreme flooding in her state. These are climate-related climate-related events. That is not a political position. That is just a fact, which I'm not getting into any of that political. I just don't talk about it on my channel. She also noted, however, that the other side of the aisle considered climate change to be a political issue. How climate change abandonment zones could create mortgage deserts. Smith notes that banks require homeowners to have homeowners insurance before they will fund a house purchase. Without insurance, there could be no mortgage and therefore no homeownership. She went on to call attention to a recent analysis by First Street, which warned that $1.4 trillion will be shaved off the value of the U.S. real estate within the next years due to this domino effect. Top climate abandonment zones where people will flee as the value of their property plummets include Fresno County, California, with projected home value losses of 10.4% and a population decline of 46% over the next 30 years. Ocean County, New Jersey, of 33% population decrease. Mammoth County, New Jersey, Sacramento County, California, and Jefferson County, Alabama. What is going to happen when insurance becomes unaffordable, or in some parts of the country, literally unavailable? She asked the chairman. What impact will that have on mortgage markets? Powell admitted that the banks would likely make mortgages unavailable in parts of the county and even pull up stakes entirely, leaving behind mortgage banks and bank deserts. Leaving behind mortgage and bank deserts. The risk is that mortgage and banks won't be there. People won't be able to get them. That is really the issue, he said. There won't be ATMs. The banks won't have branches, he went on. That's a possibility coming up, down. Sorry. That's a possibility coming up down the road. That's crazy. The banks won't stay there and keep making loans in the face of disaster. The insurance companies won't continue writing policies. They can cancel those policies every year. So I think that's, I have a hard time thinking that they won't come up with some sort of additional like state policy, kind of
Yeah, I
like
agree.
California has, and some of the other places have, that if you can't get insurance with a regular insurance company, like you can get another type of a policy. Like I have a hard time thinking that they're just going to go away.
I totally agree. I mean, we saw it in Florida, and we saw it and we're seeing it now play out in California with the FAIR plan.
Yeah. I mean, and I was talking to a few people about that FAIR plan. And I mean, I get it with Palisades and where that happened and the value of the homes there. The problem with the FAIR plan is that the max they pay out is $3 million, which doesn't cover some of those homes. But again, when I was reading this article, I was like, oh, God, I just really have a hard time thinking that there's going to be homes there. They have to protect the value of these homes somehow, some way. And if the state can make money by giving them some sort of insurance so that the mortgage companies can give mortgages on these homes, I can't see them not doing it.
Yeah, no, I agree.
So
be glad you're in Arizona though, right?
Well, yeah, for sure. I mean, because Florida right now is having a terrible time.
Yeah, I mean, and there's certain areas of Florida that are better than others. I mean, Florida's got a lot of money that came into that state the last few years too.
Yeah.
So I mean, there's going to be a lot of people are self-insured now. I mean, like in Miami, and a lot of those condos, they're just self-insured. They're just not taking out insurance because the price risk is just not there.
So how do you do that though? Like with the mortgage? I mean, because I've not had anybody do that. Like with the mortgage, do you have to
They
show?
would be a cash buyer.
Yeah, I was going to say, because you can't with a mortgage, you just can't do it.
Right.
You've got to have something. So yeah, it's crazy. All right, let's see what else they say. So who pays the price? As for the onus of the cost of a disaster befalling the property, that will fall on the homeowner and the residents, but also state and local governments, Powell told the committee. You see this happening now. He said states are stepping in where private insurance is going away. They want those areas to remain prosperous, and it certainly will have significant economic consequences. So that's the end of it. Which is kind of what we just talked about. I just have a hard time thinking that, the cities and states aren't going to let their property values just plummet like that. They just can't.
Well, look at New Orleans. We thought there's no way they're going to rebuild, and they did.
Yeah. So I mean, it's too hard for me to even fathom that they wouldn't cover that. So,
right.
Okay. I want to jump over. This is an Arizona specific article that I found. It says, why are homeowners insurance rates continuing to rise in Arizona? So more Arizona homeowners are struggling to find coverage as some insurance providers pull out of wildfire prone areas around the state and the valley. More Arizonans are finding themselves shopping for increasingly expensive homeowners insurance policies, as some learn their providers will no longer cover their home or maybe leaving the state of Arizona altogether. On Monday, the Arizona Department of Insurance and Financial Institutions announced the creation of a new council to address the availability and affordability of homeowner insurance throughout the state. The department is aware of the difficulties that Arizona homeowners in these areas face in finding coverage for their homes, and that they are increasingly turning to local, state, and regional leaders to address the issue, the department said in a statement about new resiliency and mitigation council. We are not in a panic state right now. I do think that it's to a degree where we're concerned. That's why we wanted to get this council together and really start diving into this before it does escalate and get to a point where it is a panic situation. So I just want to ask really quick, like, where are you seeing those areas?
Yeah, so I think council is a good thing ultimately. I think anytime you play, you know, offense like this and get ahead of an issue before it's an issue, I'm all for. So we're still Arizona's in a good place. Um, However, what we've had in our growth mode in our financial crisis areas like the '08 era where
Mhm.
you had literally, and I'm talking carriers that came out of the blue. They want to write business in Arizona, and they came. And so you have small regional carriers that ultimately, when claims start to come in, if you don't have the reserves to pay those claims, you're going to exit the marketplace.
Mhm.
And that's really what we're seeing right now. So we're seeing a tightening of underwriting, but we're also seeing some of these smaller players leave the market. Like they don't have the wherewithal to withstand it. So home insurance is not, I mean, because it can be one or two losses that'll break someone if they're not a big carrier.
Yeah.
Meaning, you have $1 million house and you're charging $5,000 for that premium, that house goes down. Well, they're done. Like if it's a small outfit. So we are seeing that. We're also seeing some of the mid-level carriers be very um, protective on their area, meaning they'll do stuff in PV, they'll do stuff in Phoenix,
Mhm.
but I think the article cites Ahwatukee,
Mhm.
and I'm going to cite Desert Mountain. Like there's some areas where they're like, nope, we won't touch it. It's on a mountain. It's a little bit farther away, and we don't want it.
Are insurance companies having a problem with writing policies for Desert Mountain?
Some are, yeah, we aren't, but
Interesting.
some definitely are.
That's interesting. I mean, I get
Uh,
it because of the mountain right there.
yeah, and we've had some, very small fires the last few years out here
Mhm.
that
Mm.
could have been really bad if we
Yeah.
didn't have, if, the wind was not blowing the direction it was,
Mhm.
or, so we've had some issues, in North Scottsdale that just carriers are aware of. And if they don't want to take on that risk, they're gonna, start non-renewing policies. Um, By and large, though, it's still very, very healthy. Very great place to buy a home, very great place to, and the affordability on our insurance, we're still one of the cheapest states in the United States. So like,
Where do we sit in the United States with our insurance cost?
depends on what you read. The last thing I read was we were like number 45 or 46. So but people are used to an $800 premium on $1 million house, and those days are just over.
Mhm.
You're not gonna see those anymore.
Mhm.
Um, so it's still the one of the best states. I mean, and when you look at the potential for a natural disaster, we're still one of the best states.
Right. I've been asked the question more recently, like how likely is a wildfire around here? I'm like, well, I mean, we're the desert. Like, could it happen? Sure, it could. And the most recent one that I remember was the one out in Rio Verde.
Yeah, the Diamond Fire,
Yeah,
the
was that,
one
yeah,
that
and it,
Sereno Canyon kind of, yeah,
yeah, yeah. I mean, and
yeah,
I will tell
it's
you, like, it was Fire Rock, or I'm not, sorry, not Fire Rock, but Story Rock.
Story
I was
Rock.
actually
Yep.
in the house where the fire burned right behind it, just like 3 weeks ago. And they're like, this is where the fire happened, and it'll all get revegetated, and but
Yeah, so
no house.
we were on a couple of those houses, so because City of Scottsdale came and put the fire retardant and just dropped it on these houses.
Yeah.
So I think their reaction time too, like I felt pretty good. Like I was
Yeah.
like, these guys are on it. Like,
Yeah.
so we do have a great city behind us too.
Yeah, I agree.
But
So
I
Derek,
think that fire is why we're a little bit tighter up here.
yeah. So Derek asked, made a comment, with the median home price nationwide being well north of 400,000 and with homeowners insurance skyrocketing at the same time, homeownership is a pipe dream for many in the country. It's funny because I was just listening to somebody the other day who is Gen Z. And she was saying, I know that a lot of people think that homeownership is out of their reach, but they have to kind of reframe it a little bit. And that reframing means, like, one, is homeownership important to you? If it's not important to you, then that's okay, basically. But if it's important to you, then to buy your first home, you might have to make some adjustments as to where you buy. Meaning you might have to buy out a little bit farther. You might have to buy a
Yeah,
little bit smaller.
it totally, or make some concessions there.
Right. And I
Um,
think that's the hard part,
right.
you know?
Uh, and we all did that, right? Like when we
Right.
were on our first houses, this is just it's a different time. I do agree there is an affordability issue, especially
Mhm.
going on with the interest rates right now, though.
Mhm. Agreed.
Um, and so I think that, there's gonna be some incentives for first-time home buyers. But more people are gonna be renting longer and, you know, and we're seeing it. We're seeing kids live with their parents longer.
Well, and what was it? Just a few years ago, the average or the average rate or the average age of a first time home buyer was like 28. And now the average age of a first time home buyer is like 34,
Right.
something like that. So, I mean, the ages are going up so that people can have time to save. Um, but I still believe in home ownership. It stinks that, everything is a lot more expensive. There's no question. And that it is a little bit harder. And I think the thing too, that people that haven't kind of been through cycles of mortgage rates kind of up and down and kind of all over the place, is that we just came off of historically low interest rates. And yes, the prices were going up, but those rates allowed you to buy a lot more house. And now with the rate so much higher, that means that the amount of house you can buy has to decrease. And that's hard. And people go, but the rates were 3% or they were 4%. But I mean, I don't know about you, but my husband and our first house that we bought was at 7%. My father-in-law looked at us and he said, lock that rate.
Lock it in.
Yeah, he
Yeah,
goes, you are never
that's
going to
the
see
same
rates
thing.
that low again.
Yeah, no, you're exactly right. And I didn't know at the time, but yeah, we'll never see those low rates. We probably will never see those low rates. I think inventory is going to free up a little bit though, as baby boomers kind of move on, and generationally, I think Gen Z is in a fine place. I feel like Gen X is finally getting their piece of things right now. It took a long time. Because Gen X, keep in mind, with the '08 stuff, I mean, you bought a house in '07, you're in a tough spot.
Well, we owned our house we bought our house here in Scottsdale. This wasn't the first house we bought, but we bought our house here in Scottsdale in 2002. And just like everybody, we were like, oh, should we buy another one? Should we buy another? And we didn't end up buying it. We stayed in it. And we were lucky. We just wrote it out. But we saw the price on our house go sky high and then drop to almost what we paid. And then we
Yep.
just wrote it out and, saw it rise again. So that's the big thing that I try to tell people too, is that, when you buy a house, you have to look at it. You're going to be staying in it for 5 to 7 years, at least. You have to.
Yeah, totally. If not longer. I mean,
Yeah.
really, like it just the math on it,
Yeah. I mean, and it's funny because I look at it and I'm like, okay, in some ways, even though it's your primary residence, in some ways it is an investment because you want to see it go up. I have another client of mine that he's like, I see it as a forced savings account, which I agreed, either way, I kind of look at it and go, okay, yeah. But it's a way, I mean, I don't know. I don't like moving that much. I sell real estate for a living. And I know some realtors that move like every 2 years. I'm like, no, thank you. I don't like moving that much.
Yeah.
So that's my big thing. Like, I don't want to rent because I don't want to move that often. But I mean, Derek, hang in there. I know it's hard. It's hard,
I
but
know.
adjusting some expectations, adjusting some of the things that you thought maybe you could get, and just remembering too that, and I know that people hear this and they're like, whatever, but nobody buys their forever home the first time.
Right.
And no one buys their end all be all home the first time. They just don't. And I've seen people literally build a custom home saying, this is going to be the last house I ever live in. I'm never moving again. And guess what? They move.
You're exactly right.
Yeah. So it happens.
They just got done remodeling and they're like, we're out.
They're like, oh my gosh. Yeah. So yeah, my home is paid off, but I'm watching family members struggle with this now. I know, I do too. And I've got a cousin that's in college. He's a senior in college. And I see it. I'm like, oh God, but again, do the best that I just tell him, I'm like, do the best you can to save as much money as possible. And when you buy, make sure you can afford it.
Right.
Because that's the big thing. Like, right. If you can afford it at 7%, and you have to be able to afford it. Like I never tell anybody like, go and buy a house that you can't afford. Don't worry. The interest rates are going to drop. No one knows when that's going to happen. And I think that our interest rates are going to just do this for this year. They might bounce a little bit. We might see 6.5% at one point this year, but I think they're going to bounce right back up.
Well, and you make an interesting point too, because, I always say don't rush into it because, it's no fun to have to replace a water heater or in Arizona, an air conditioning unit in June.
Right.
It's one of those things with homeownership, whereas you rent, you make a call, it gets done for you. And so you can focus on your career, not necessarily homeowners maintenance. So,
right. And it's funny because I hear that from people a lot. They're like, well, I don't want to have to repair anything. And I literally just yesterday got an email from a client that I sold a house to 2 years ago, sent me an email and he said, man, you were not kidding to make sure that I saved money for any repairs.
Yeah, it's so smart. Because a lot of times you spend every dollar to get into it and then boom, the AC goes out.
Right. Right. You have to be prepared. And that's why I always talk to people like, a home warranty is a great thing for certain people. I know some people are like, I'm not doing that. I think it's a waste of money, but it really can be a savior for some things.
Yep.
You move in and your hot water heater goes out. You know what? For $75, they'll come and change your hot water heater. For things like that, I think that there is a benefit. And people always go, wait a second, is this my homeowner's insurance? I'm like, no, totally different from your homeowner's insurance, but it can be good. But then there's other people that, they're savvy buyers. They know what they're getting into. They're like, I do not want a home warranty. I'm like, no problem. That's just fine.
That would be a good future topic for your show, insurance versus warranty. Because
what say you, Jeremy?
Let's do that because seriously, there's so many different people get confused with the things. And nowadays, it's so important not to use your insurance policy like a warranty because you make a call, they're logging it, they're filing a claim, it's zero paid out. Now you don't have insurance anymore at the next renewal.
I know. I got warned, and we've never made a claim on our insurance, but when we changed ours, I got warned. He's like, whatever you do not make a claim unless you absolutely have to.
Yeah.
And I'm like, this is crazy. Like, okay, give me all your money, but don't use us. Because then we won't give it to you again. I'm like, this is bananas.
Yeah. I mean, we don't agree with it, right? But we just have to. These are the new rules, so we just have to get the new rules out there.
Yeah, it's just crazy, How do you feel about home warranties?
I think they have their place 100%. I think, especially on some of the older starter homes or older homes, I think 100%. If you can cash flow it, it's not an issue. But if there's if you don't have that emergency fund set up, I think it's almost a necessity.
I agree with you. That's when I usually talk to people about it. I'm like, look, if God forbid you move in and there's a leak under the sink, the refrigerator goes out, your washer dryer goes out, the hot water heater goes out. If you have a pool, the pool equipment starts to leak, whatever. Like if you don't have the money to just even get that fixed, which could be, anywhere from $300 to $2,000, then get a home warranty.
Yeah, it's just absolutely.
Yeah, because and my big thing though about
you may want to renew it, right? You may want to even renew it after that 1 year.
Exactly. Well, because I usually tell them like, if for a buyer, it's like ask the seller to pay for it. They'll likely pay for it for you.
Right.
So then it's no money out of your pocket. So for the first year, and then a lot of people don't realize like you can renew that. They don't know it.
Right.
or they forget they have it and then they don't use it.
Yeah, we always say, like, on the warranty, call them all the time.
Right.
You can, there is no such thing as, a non-renewal on that. So if they can't pay it because of some exclusion or something, great, but that inquiry doesn't hurt you.
No.
Insurance is the opposite. The inquiry hurts you.
Right. It's so crazy.
Yeah.
It's so crazy. So what else in the insurance world do we need to know about when it comes to home ownership?
I think just use your policy as to deal with the devastation, not aggravation, meaning the big stuff. The other hot topic right now, just slow and continuous, is generally not a insurance issue. Sudden and
Meaning,
accidental is. So you have a leaky faucet or a leaky something, dishwasher line or something is dripping and you don't catch it and it happens over a few months. That's probably not going to be covered by insurance. Whereas you come home and you slip because the water heater exploded or a laundry hose exploded and now your house is flooded. That's an insurance issue.
yeah, for sure. It's people call you just for like my sink is dripping.
Oh yeah, or it's monsoons, right? Because it never rains here, but when it does, you discover, oh, I've got a little bit of a leak in a window pane or something. We get calls like that all the time. Now, one of the benefits of calling us instead of the company, right, is we will talk to you and tell you, look, we're not going to file this. Get a bid. Let's see how much it is, and then go from there. But we want this off the record.
Right. That's so funny. Like I look at that and I'm like, well, that's just maintenance.
It's just maintenance, right?
That's just maintaining your house, which is crazy. To your point a little bit ago, you said something about you think that we're going to start seeing some inventory, kind of break free. We are seeing our inventory increase. The problem that we're seeing right now is the inventory that's coming on the market, it needs some maintenance.
Needs a lot of work. Yeah.
And
like that first time homeowner can't come in and put $100,000 to refresh it.
Right. Yeah.
So,
I mean, even the people that aren't first time home buyers, they're looking at these going, you want this for your house, this money, this price for your house, but all these things need to be done. And, they're kind of looking at it going, but it's well maintained and it's clean and it's like, yeah, and the one down the street sold for XYZ. And I'm like, the one down the street was updated and had a new roof and it had new air conditioning units and it had all of these things. And yours does not have that. So,
well, that's why they need someone like you, though, because you got to be psychologist.
oh yeah.
Because everyone thinks, you go to sell a car, it's the same thing. My car is worth more than really I'm going to probably get for it.
Yeah. No, it's crazy. And so again, everyone's talking about, inventory is increasing. And so that's great for buyers. The problem is that, I have a lot of buyers and they're all still struggling to find the right house because those houses that are really, really well maintained and updated and, all of that, those are still going fast and for a lot of money.
Right.
So it's interesting. And people go, well, what do you think is going to happen with home prices and where are they going? And I'm like, I feel this year, I think we're going to be pretty flat.
Yeah, totally agree with you.
I think
you're going to have some people kind of wake up and go, on this, if I haven't updated my home in 20, 30 years, I may need to lower that price a little bit more even. And
honestly, with some sellers, like they kind of have to get beat over the head a little bit by the buyers because they really feel that their home, and again, it's that perspective. They don't realize that when we were in COVID and all the prices were going up drastically, that was kind of a while ago now.
Right.
And it wasn't like, because people go, well, just a few months ago, everything was going up. And it's like, well, it kind of wasn't, certain places maybe were, but not everywhere. So it's an education for sure. It's the same thing that I deal with when I go and I talk to sellers. I'm like, okay, so how old is your roof? They're like, oh, we just had that redone not too long ago. Great. How old is your air conditioning? I just had that redone not too long ago. Great. Like, so can you show me like the receipts? Give me those things because they're going to ask me for that. And then they show it to me. I'm like, oh, this was 4 years ago. Oh, and this one was 5 years ago. They're like, was
Right.
it really that long ago? You know, time just passes so fast that people forget.
So true.
Yeah.
We
So, I
have
mean,
a joke, like we ask, do you have any tickets or accidents? And it's, oh, no, I'm a clean driver. You run it. Oh yeah, there's that photo radar. I forgot about that. I forgot about that. Yeah.
you're like, oh, wait, but I went to traffic school for that. Did that not go
Yeah.
away?
Yeah, I didn't think that counted.
Right. That's what I would say. Does it still count? It still comes up for you?
No, in a traffic school, you're good.
Okay, good.
It's when you don't go to traffic school, we know about it.
That's crazy. Well, I know you got to run here soon, so I just want to wrap this up a little bit. Thank you very much. I think
Awesome. Thank you. It's my pleasure.
You're welcome.
Appreciate your viewers.
Yeah, I think that insurance is going to be an ongoing topic. I think that we're going to continue to see prices kind of increase.
So market projection, at least for Arizona, 24 was the worst year, period. Like, so the 24 was the be all end all worst year of my career as far as increases go.
Okay.
Moving forward, there's actually some stabilization going on right now. So 25, you may see a very small bump, nothing like you saw in 24.
Oh, that's good.
So yeah, and this is Arizona specific. I don't have figures for the rest of the country.
Yeah, no, that's good. It's good to know because I know that the last 2 years my insurance would have gone up.
Well, because you also you want to make sure, the public knows that, especially someone buying a house here, yes, insurance went up the last couple of years, but they see it and they go, oh, that's going to happen every year. And it's not like that. No, like 23 and 24 were anomalies when it comes to home insurance.
Well, that's good because I was thinking, well, here we go. I mean, you don't think that the hurricane and the fires in California are going to make it do the same thing that we just saw?
Just in certain areas, absolutely. But other areas are not. Like most large insurance companies, what happens in California stays in California, meaning California is going to pay 100%. Like there's no doubt about it. Those rates
You don't think there's going to be any bleeding into all the other states because they got to get paid, and I don't know that they're going to get it all out of California.
I think with the larger carriers, you shouldn't see it. With some of the smaller ones, yes, you will see it. Now, that being said, what is the one thing I am concerned about in Arizona with all these homes being destroyed and being rebuilt? Building costs. What are our building costs going to do? Because we already have such high building costs here for cost price new. Like, what is that going to look like? And tariffs. So those two things are kind of like, if we see an increase, it's not necessarily because of the fires. It's because of the increase in building going on in California, and then it's basically what we're importing.
Got it. Yeah. No, I mean, I agree that the building costs will be, I think, play a role.
Yeah. Yeah.
Absolutely. So, well, thank you. I know.
Awesome. Thank you so much.
It's a crazy topic, but I appreciate your time. Thank you very much,
Absolutely.
Jeremy.
All right.
See you later.
Thank you very
Thanks,
much, guys.
everyone.